Loss of use insurance for horses is often described as a safety net, a way to protect yourself if something goes wrong. But what happens when your horse does not die and still cannot do its job anymore? There is a moment when everything changes and no one else can see it. The horse is still moving, it is still sound enough to ride. On the surface, it looks exactly the same, but something is missing. It is not dramatic and it is not obvious. It's just enough that the rider feels it first. And in that moment, a quiet question begins to form. What if this horse never comes back? Not back to where it was, not back to where it was meant to become. Because in this horse world, some of the most significant losses do not look like loss at all. Most horse owners believe they already understand how loss of use insurance works. If the horse can no longer perform, the insurance will cover the loss. It sounds simple. If something goes wrong, you file a claim and receive compensation. However, loss of use insurance does not work that way. It is not built around what feels like a loss. It is built around what can be clearly defined, proven, and measured. That difference is where the misunderstanding begins. So what are you actually insuring? When a horse is insured under a loss of use policy, it is not just assigned a value. It is assigned a specific role. The role is written into the policy. The horse may be insured as a dressage horse, a show jumper, an eventer, a breeding animal, or a pleasure horse. In many cases, the classification is even more precise. It may include the discipline, the level of competition, or the intended use. From that point forward, everything about a future claim depends on one central question. Can the horse still perform the role it was insured for? This does not refer to a similar role or a reduced version of that role. It refers to the exact function defined in the policy. So what happens when something goes wrong? In most cases, the process does not begin with a dramatic injury. Instead, it begins with uncertainty. A horse may feel slightly off. Its performance may change in a way that is difficult to explain. The rider may notice a subtle difference that others cannot yet see. The response is usually the same. The horse is rested, training is adjusted, and veterinary advice is sought. Over time, the horse may improve. However, improvement is not the same as recovery. The horse may become comfortable enough for light work, but not capable of returning to its previous level of performance. This is the point at which many horse owners begin to consider loss of use insurance. So how does the claim process begin? Filing a loss of use insurance claim does not result in an immediate decision. It begins a structured and detailed process. The insurer must be notified, often within a specific time frame. The owner must then provide documentation, including veterinary reports, diagnostic imaging, and a complete medical history. This does not only include the current issue, it includes any prior conditions, no matter how minor they may have seemed at the time. This is because one of the first things insurers will determine is whether the condition is truly new. If the issue can be linked to a pre-existing condition, the claim may not be covered. So why does medical history matter? Many horses have minor issues at some point in their lives. These may include small irregularities, temporary lamenesses, or conditions that resolve with rest. At the time, they may not seem significant. However, during a loss of use insurance claim, those details can become critical. If the current condition is considered a continuation or progression of a previous issue, it may fall outside the scope of the policy. This is one of the most common reasons claims are challenged or denied. So how do you provide permanent loss? Even when a condition is clearly diagnosed, another requirement must be met. The owner must prove that the horse will not recover sufficiently to perform its insured role. This requirement is not based on assumption. It must be supported by evidence. The horse is typically given time for treatment and rehabilitation. Progress is monitored over a period of months. Veterinary assessments are conducted to determine whether improvement is possible. In many cases, more than one veterinarian must agree that the condition is permanent. If there is disagreement, an independent evaluation may be required. Only when permanence is established can the claim move forward. After treatment, rehabilitation, and evaluation, the process reaches its most important stage. The insurer must determine whether the horse can return to its insured use. This decision is not based on how much the horse has lost. It is based on whether it can still perform the specific function defined in the policy. If the horse can return to that role, even at a reduced level, the claim may not qualify. If the horse cannot perform the role at all, the claim may proceed. Why so many claims do not succeed? In many cases, the outcome is not a clear yes or no. The horse may not be capable of competing at its previous level, but it still may be usable in some capacity. For example, a horse may no longer be able to compete but may still be suitable for light riding. In these situations, the horse is not considered a total loss of use. Many loss of use insurance policies are structured around total loss of use rather than partial loss. As a result, a horse can lose its competitive career without meeting the criteria required for a payout. So what happens when a claim is approved? If a loss of use insurance claim is approved, the insurer provides compensation. This is usually a percentage of the horse's insured value rather than the full amount. The exact percentage depends on the policy. However, the process does not end with the payout. The horse's status is formally recorded. In some cases, its future is restricted. The owner may be required to agree that the horse will not return to its previous role. This reflects the fact that the payout is based on a permanent loss of function. So what is the gap between expectation and reality? This is where many owners experience frustration. Owners often think in terms of loss potential, time, and emotional investment. Loss of use insurance operates in terms of defined function, documented evidence, and contractual thresholds. A horse can lose its intended career without meeting the strict definition required for compensation. This gap between expectation and reality is at the center of most misunderstandings. So what is the system designed to do? Loss of use insurance is not designed to cover every type of setback. It is designed to answer a single specific question. Has the horse permanently lost the ability to perform its insured role? If the answer is yes, compensation may be provided. If the answer is no, even if the loss is significant, the claim may not be successful. Loss of use insurance is not about what could have been. It's not about potential plans or expectations. It is about what can be proven within the terms of a contract. Understanding that distinction is essential. Because without that understanding, it is easy to believe you are protected when in reality you may not be. So here is the question. Do you think loss of use insurance works the way it is intended to? Or do you think the gap between expectation and reality is too large? Let us know in the comments, because understanding how loss of use insurance really works may be one of the most important things a horse owner can do in their insurance journey.